In our today's video we are going to learn what are the positive impact of mergers and acquisition on shareholders. So let's go. Mergers and acquisitions, M&A, can have several positive impacts on shareholders when executed successfully. Here are some potential benefits that shareholders can experience as a result of M&A. 1. Increased shareholder value. M&A deals, when strategically planned and executed, have the potential to increase shareholder value. This can happen in various ways. Synergies and cost savings. Merging companies can achieve synergies by combining operations, eliminating redundancies, and reducing costs. These synergies can lead to improved operational efficiency, increased profitability, and ultimately, higher shareholder value. Revenue growth. M&A can enable companies to expand into new markets, access new customers, or introduce new products or services. This growth potential can drive increased revenues and contribute to shareholder value. 2. Capital appreciation. Successful M&A transactions can result in increased share prices and capital appreciation for shareholders. Positive market reactions to the announcement and successful integration can lead to a rise in share value, providing shareholders with the opportunity for financial gains. 3. Dividend payments. Following an M&A deal, if the combined company generates higher profits or experiences improved cash flow, shareholders may benefit from increased dividend payments. This can enhance overall shareholder returns and income. 4. Diversification and reduced risk. M&A transactions can enable shareholders to diversify their investment portfolios by gaining exposure to different sectors, markets, or products. Diversification can reduce risk by spreading investments across a broader range of assets, potentially mitigating the impact of adverse events in a specific industry or market. 5. Increased market power and competitive advantage. M&A can enhance a company's market power and competitiveness. By combining resources, expertise, and customer bases, merged companies can achieve a stronger market position. This increased market power can lead to improved pricing power, higher market share, and a competitive advantage, ultimately benefiting shareholders. 6. Improved financial stability. M&A deals can contribute to improved financial stability for shareholders. Combining resources and assets can strengthen the financial position of the merged company, reducing financial risks and enhancing the company's ability to weather economic downturns. It's important to note that these potential positive impacts of M&A are not guaranteed and depend on various factors, including the specific deal, industry dynamics, execution, and market conditions. Shareholders should carefully evaluate the strategic rationale, financial health, and potential synergies of an M&A transaction before making investment decisions. Thorough due diligence and seeking advice from financial professionals can help shareholders assess the potential benefits and risks associated with an M&A transaction.